Hey folks, Dan here. I'm doing a bonus episode today because I'm trying out a new microphone. So if you've seen any of my previous videos and you'd like to comment if this sound is okay, or if it's an improvement or if it's worse, I would really appreciate it. And then also if you enjoy this format where you have some visual of the charter along with the chart, please let me know that as well. I don't know that I'd be able to do it this way every time, but I could certainly do it this way sometimes. And lastly, as always, before we get into it, if you enjoy these videos, please hit the like and subscribe button, and keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as, investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Alright, so let me fire up the chart here. And today, we're going to look at Riot. So Riot came on my radar because it actually came up on my scan here on Think or Swim. So we'll take a look at that in a moment. But first, sort of orienting ourselves here on the Webull chart. It had this run from 636 all the way up to about 1587, if I put that in correctly. Yeah, 1587. And then drew back down here, like just under $10. And so now it's trying to make its motion back off of that range. So this is just to say these levels that I have on here are dependent on that 999 swing low holding. So if it were to dip lower than that 999, these levels kind of get bust a bit. But for the period of time, it seems like it's holding, and it is a decent percentage away from that 999 at the moment. So 1223 to me looks like the most important resistance level. If we zoom in here, you can see it worked right off of that several times on Friday, and it got really dippy in the interim. Right, it came all the way down here to like 1147 or so, 1148, and then was able to swing back up above that 1223, but ultimately shed it back off and came back down into the mid 11s again. And so previous days, again, struggling with that 1223. So you just see it sort of over and over and over again, and that seems pretty clear to me that that's where the battle is at the moment. So if it can take over 1223, we have plenty of levels to the upside right here, and even decent price action to go off of. Previously, you see old levels in here that it was able to maneuver through for better or worse, depending on your positioning. But if we get through 1223 and can get some strong support there, just keep in mind it is strong resistance right now, but that's not necessarily something to be afraid of. Strong resistance becomes strong support. So if that's the case, then 1362 can come into play. 1474, you see a few recent swings toward that pushed off pretty handily, which is, again, okay. It's just recognizing where the strong motion comes from and what it does in those ranges, and knowing that if it can flip that, that it provides some strong support. If it can work through 1474, we have 1587, 1746, and 1950. Now, I don't have anything additional to the downside here other than this 999. Let's throw something in because there's plenty of levels here. Let me do a horizontal ray. That's what I was looking for. So to me, it looks like there's probably something. I don't want to put too many levels because I don't want to just clutter the chart. But let me see where I want to put it. I'd say right around here. Let's say like 1046. See, there is a bit of a range. That gets so jumpy. I'm going to situate it at 1065. And just know that there's about a 10 to 20 cent range on either end of that. But this is just a little bit of maybe like I'll put this as orange to just say, here's maybe a little bit of like a warning zone where like it's getting mighty close to that 999, which is the last level that we have on the chart at the moment, just because that would keep intact, right? If it can not break down through 999, that keeps intact this recent push from 636 up into the 15s, and it doesn't bust the swing low. that was the reaction to that $6 to $15 run. So 1065 to me looks like a good additional level to put in there. And I mean, like I said, there are others that we could put in there if we really wanted to clutter the charts. But at some point, I do think the clutter is less helpful because it just makes it hard to look at. Now, pulling in here the EMAs, we can see where things are looking. Now, it is having nice motion at the moment, sort of consolidating. You see this, here it looks more clearly like, you could call this out as like a flagpole and then a bull flag forming in this range, right? And it's forming off of the 183 EMA. So as long as it continue to put motion over there, there doesn't appear to me to be immediate greater risk for a downturn. Now, could that change due to some just immediate sort of rug pull, the bottom falling out, rush to the basement, as they say, stairs up, elevator down? Yeah, of course, that could certainly happen. But if the 183 is holding for a period of time here, then it gives ample opportunity for even those short-term EMAs. You see the 8 getting a little bit of a crossover here below the 21, kind of like laying on top of, sort of laying on top and then just sort of like pushing off of ever so slightly the 34. But this motion is so sort of rough and rugged. It's not smooth, I guess is what I'm trying to say. A lot of these charts that we look at look significantly more smooth than these sort of very sharp edges that we see, especially on the 8, this white EMA here. And so to me, what I'm most interested in, especially because it is close to it, is that gray 183 EMA. As long as that is intact and it comes down and it touches it and it moves off of it, maybe it dips a little bit below, but it quickly recovers and puts motion back in above it. The short-term EMAs are going to do what they're going to do based off of that price action. This is maybe one that I would pay a little bit more attention to the candles and where they're moving as it pertains to the 183 EMA versus how the short-term EMAs are reacting in conjunction with the 183 EMA. If you've seen my EMA like short tutorial videos, I'm reluctant to call them that, but if you've seen those, in there I talk a lot about my focus always being on the EMAs and how they're interacting with each other, not necessarily what the candles are doing off of the EMAs. This is maybe an exception that would prove that rule. That's just my read on it at the moment. I don't look at Riot every moment of every day, that's for sure. I probably check it a few times a year when it comes up on my radar. Now, volume positioning wise, quite a bit of hefty shelving in the range between, say, 1050 and just above 14, right? 1054 to 1409 with a strong sort of volume positioning at 1209. So 1050 to 14 with a mid-range stop in there of about of a smidge over 12. So that's where you can expect a lot of action, right? A lot of buying pressure coming in those ranges when it's approaching it, and a lot of selling pressure coming in those ranges when it's approaching it, right? So selling pressure if it's approaching it from below, buying pressure if it's approaching it from above. And yeah, it doesn't mean it can't work its way through it, obviously. It just means be aware. There's a lot of consumption that's going to happen there on both sides, and it's going to sort of wobble the stock a little bit in either direction because of it. Order flow, 28.49% total profited shares as of close on Friday. So if folks do see some positive motion, maybe if they're still interested, they do come in and provide some additional buying due to like dollar cost averaging down. I don't know, of course, that they would do that, but if they see potential for bullish motion, maybe that happens. I don't know. But aside from that, do we see any large scale coming in? A ton of large scale coming in on February 3rd, actually, so a few days ago, and then it's scaled down quite a bit into a more sustainable range. It's not anything like horrifically bad about it scaling down. Can't stay at that 21.25 forever. You'd have, quite the motion there if that were continuously the case. But pretty, moderate to low volume on those large scale orders the last 4 trading days, but yeah, there's a ton piling in prior to that. So will that mean anything? I don't know. We'll find out as the days come through. But to me, this 183 EMA seems very important, and the levels that we have, of course, are certainly holding up at the moment. Like I said, even if you zoom in, you have a good opportunity to get a read off of them. And there's not going to be a ton if you zoom in on the chart, but that's the point. Sort of a singular focus, a more just a more highlighted, spotlighted focus versus this very broad kind of floodlight, if you will, where you're just kind of taking in a ton of different variables. Now, flipping over here to the think or swim side of things, this, like I said, this got on my radar because of there's a retrigger and refire happening here. Let me see if I want to think of it that way. Yeah, I would tend to think of it that way. See this previous trigger, like pretty lengthy trigger period, and then it fired, and yeah, it had some motion. I wouldn't call this wildly outsized motion. Even though the channel is pretty wide, I would look for something like back here where it did produce some motion, at least strongly to or a little bit through the channel, at least to feel like that outsized motion had occurred. And this really fell short of that, right? There's a little bit of motion here to it, but it just quickly drew right back down in, and there was no sort of like counteracting major motion that came in. So to me, this feels like trigger, fire, relatively flat, and now it's re-triggering. Re-triggering at the mid-range of the channel, at the base ATR for February, relatively early in the month. So these ATR levels, there's time if it does want to play through them. The call trigger at the moment for February is at 1308. The +1 ATR all the way up to 1696. If it does go against the bulls, then you have a put trigger at 1068 with a -1 ATR all the way down to 680. So just keep in mind, we're looking for an outsized move from the CTM squeeze indicator. Don't know which way it goes, right? That's always the question. That's where you have to really do your best to understand the motion that's happening. Maybe if there's macro forces, maybe if there's any catalyst particular to the stock coming up, fundamentals, partnerships, earnings reports, so on and so forth. Do what you can to glean information from there. But this outsized motion that it's looking for can go in either direction. So just keep that in mind. But that's sort of the range that's sort of on the chart at the moment. 680 to the downside, 1696 to the upside. So huge range there to kind of work through. But that stretch to 1696, would put us through this 1587 that we have on the chart. I do have some stretch levels up here, 1746 and 1950. So they'll play more of a factor if we get there. So if we do, we want to, like we said, add something else in here because there's pretty large percentage gaps in between some of these levels. We could do that, but for now, we'll keep that where it is and call this a video. All right, folks. Well, I hope that you are having a good weekend, and as always, I appreciate you watching, and I will see you in the next video.